So, hi everyone. Thanks for joining me. Monday, November 15th, for our weekly outlook in live trading room. This session is being recorded. A quick disclaimer before we start. Of course, everything I say here is for educational purposes only, not as a trading signal to buy, sell, hold, or anything like that. All the analysis is my opinion only, and of course, during this session, feel free to ask anything you would like to ask about any pair or anything in the market. But again, it's my opinion, so act at your own discretion. As you know, trading is holds a risk to your portfolio, so risk only what you can afford to risk. And that's it. Let's start. Every question you have, feel free to write it down in the chat box to hosts and panelists, or only to me, to hosts, if you wish so. Hi, Conrad. Welcome. So let's start. And before I start with the analysis of the major pairs, let's start with a few things about the key economic events for the week. Just let me know that you can see the presentation with the economic calendar. Yeah, okay, thanks, Bob. All right, so main events for this week. So a few speeches by Christine Lagarde, President of the European Central Bank. For the pound, we have in England the claimant count change, the unemployment change, and in the US, the core retail sales and retail sales, which obviously indicate also the strength of the economy and also potential inflation. So that's these are important events for tomorrow for the US dollar and for the pound, for the British pound. And later on this week, we also have the CPI in England, the Consumer Price Index. Obviously, as you know, and probably also notice in the supermarket or anywhere else, prices are going higher, inflation is soaring, oil prices, goods prices, whatever. So CPI in England and in the European Union should be very interesting to see the numbers after CPI in the US has risen considerably and a lot more than expected, and I think over 6% annually. Building permits in the US, CPI also in Canada, and for those of you trading the Canadian dollar, crude oil inventories are also an important piece of data. And of course, later on this week, we have the initial jobless claims, which is also a very important number that affects currencies against the US dollar. Pay attention, all these events are in GMT, so for Central Europe, add one more hour. For East Europe or Middle East, add 2 hours, and for East Coast, the US East Coast, reduce or remove or take 5 hours back. A quick look at the dollar index. The dollar index has crossed above the level of 94.50 or so, or 94.60, which is quite an important level, and the overall trend is bullish. As you can see, this level around 94.50 was a resistance level for a few weeks, but last week it crossed pretty strongly above this level, which was previously support and then resistance. Is this part of the double bottom that was confirmed? Maybe. Okay, but the target is around 97 or so, around previous supply zones. So dollar overall is gaining strength, and we'll go to trading view charts to have a look at dollar index and the 10-year yield as well, and see, and also maybe some indices to see where the market could be going, because that also obviously affects the strength of the dollar and the currencies which you're trading against the dollar, the US dollar. A quick look at the currency heat map. It's from around noon today, but we'll have a look at the updated one. It hasn't changed a lot because the strongest pairs at the moment, or the strongest currencies at the moment, are the Australian dollar, the Aussie, and the New Zealand dollar, the Kiwi, which was also last week's star. It was also strong at the beginning of last week. And currently, weaker pairs include the Japanese yen, weaker currencies include the Japanese yen and the dollar, that, as you've seen earlier, is going down a little bit currently. And the dollar index is going down a little bit. We'll have a look at the daily and the intraday charts in a minute. But the Australian and the New Zealand dollar are currently the strongest currencies. So I'm not, now is dollar CAD on a pullback. So now let's go to the, let me share the MetaTrader platform, and let's go over the charts themselves, have a look at the majors, and let me just share it. Okay, so let's have a look at the majors, a bird's eye view over the majors, and I'll start from the weekly or monthly levels, but we'll go down to the daily or intraday levels on most of them and see where these this week's levels are. Overall, euro dollar seems like it's starting to move inside sort of a very big triangle, a symmetrical triangle, and at the moment, and I mentioned it also last week, it's in a downtrend. As you can see, it also broke last week's. Last week it broke the immediate support level around here, and the overall trend is very, very bearish. You can see it also in the moving averages, and any pullback, for example, to a level like this area, this level, or pull back to the moving averages, can give you an opportunity to go short. As you can see at the moment, it's quite weak. So look for pullbacks with some price action in order to look for short opportunities to sell this pair. Again, at the moment, it seems like it's, ranging or is moving sideways around some sort of a support level. But remember, the overall trend is very bearish, and I expect in the long term, in the long run, if it continues going down, obviously, to come down to this demand zone, which is a few hundred pips below. The moving averages, yes, are the ones I use are 9, 21, and 50 exponential moving averages on all time frames. In the past, I used to change the moving averages a little bit on various time frames, or add, like, for example, the 100 EMA on longer time frames, or add the 5 EMA on shorter time frames, whatever. But for me, these are good enough on all time frames. So as I mentioned, it's the trend is a strong bearish trend. I saw traders, I sometimes go over some trading accounts and of our traders, and I see some people just going long on euro dollar somewhere in the middle of nowhere, in the middle of the downtrend, because they think that now it's turning around, that they're trying to catch the, you know, the peaks or the lows, thinking that this is where it's turning around. Listen, it's, you know, there's a phrase of catching, don't try to catch a falling knife. It's really catching a falling knife. And when you try to guess the places where the currency will turn, or the pair will turn around, your account is the one that will eventually bleed. No point in trying to guess where the trend will finish. Just go with the trend. And of course, don't go in the middle of nowhere. Look for entry points where you have opportunities. For example, here, okay, it's around here. You can see that it touched a specific price and went down, and then went back again, gave you some reversal candles like this doji, like this spinning top or whatever, and a moving average. So you have a confluence, a previous resistance, hesitation candles or reversal candles, and a moving average. The odds are in your favor. So look for places like this. Don't just enter in the middle of nowhere. Don't just enter here. Well, let me just make sure you can see the mouse. So don't just enter in the middle of nowhere, like for example here. Here it doesn't say anything. I mean, yes, it's in the middle of a downtrend, but it can for some reason turn around here and only then continue. But if you enter around as a zone where you have a confluence of signals like previous resistance, hesitation or reversal candles, a moving average that serves as a dynamic resistance. So you have two resistance points and candles, hesitation candles. The chances are in your favor, or the odds are in your favor, and this is a place where you can enter short with a closer, with a relatively tight stop loss, because you have a reference point, or in this case, even two reference points. And yes, Anna, I mean, I'm not saying you cannot go long in the middle of a downtrend if you're scalping, if you're looking for short-term trades. I don't know, for example, you know, you have an uptrend on the 5-minute chart, and it's giving you some sort of an up signal, or crossing above a previous high. It's possible, but for those of you who are, and I was referring mostly to traders that I see, like swing traders, that leave their positions for a few days. You know, there's no point in guessing where the trend will turn around. Okay, especially when the trend is so strong. All right, so that's for the euro dollar. Again, overall at the moment, the trend is super bullish, super bearish, and that's it. Just wait for opportunities to go short. Yes, the trend is your friend, exactly. Pound dollar. Pound dollar is, I mentioned it last week, is in a downtrend. It was kind of playing or dancing or ranging above this sort of neckline, even though it's not a head and shoulders pattern, definitely not a classic one. But this line was broken down last week. For the first time, the pound dollar closed below this line, which makes you know, or gives us an even more bearish sentiment on this pair. However, pay attention to the fact that, at least on the monthly chart, you can see it here, we had previous highs here, more or less. I mean, it's not an exact line, it's more like an area, but around this area, there were previous resistance points or resistance lines, And once it's been breached up, now it could be testing it, okay? And again, I think the trend is still bearish, but expect some support or some war between the buyers and the sellers around this zone. And again, even though this trend line has been broken to the downside, it can always return back above this trend line or play around this trend line on the weekly chart and of course on the daily chart. So it can still be dozens of pips to the upside and to the downside. So just be careful. However, I think the sentiment is still pretty much bearish. And if it tests below this line, again, confluence of signals, we have maybe a retest of this line, of previous low, of the moving average. So anywhere around here, if it retests it and gives us some sort of a rejection and a confirmation candle of the rejection, a reversal candle of some sort, a doji, a spinning top, whatever, it can be a good opportunity to start looking for a short position and start going down. For those of you trading daily, on the daily charts, obviously you have to wait for the daily close. For intraday traders, you can see here that it's sort of compressing. It's not moving strongly to the upside. It's sort of compressing into the zone, and any reversal signals around here could give you an opportunity intraday or like medium swing traders to look for an entry around the H1 or H4 charts. So that could be interesting to see how pound dollar behaves below it. As you can see, it broke before, but then came back, and on the weekly chart, it closed above. Last week, it closed below. So now the sentiment, as I said, is even more bearish. Dollar yen on the weekly chart is very bullish, and even though it kind of found some resistance around the supply zone on the weekly chart, it didn't give us any like strong bearish candles. Yes, a couple of bearish candles, but not something that shows major or strong power from the sellers. And this candle from like a month ago even breached above or crossed above the or consumed the supply zone. And as you can see, the chart on the weekly chart retraced back to the moving average, the 9 EMA, and quickly retraced back up. And the overall trend is bullish, and it could very well continue moving to the upside all the way to this supply zone and even higher. You can see that on the weekly chart, and I speak about this pattern quite a lot. First of all, this trend line has been crossed to the upside and then retested, but also, as those of you who follow me in the trading room know that I like to see when the candles cross above the moving averages and then come back and retest them, and the moving averages cross and start pushing the price higher when the price turns to the upside. So this is the case here, a big candle crossing through even all three moving averages, and then sort of a consolidation, an accumulation. It's on the monthly chart, so obviously it's for a few months. Accumulation as the moving averages start, the short one crosses above the longer ones and starts moving higher and pushing the price higher. So the trend is still bullish, and if the previous highs are crossed, we can expect seeing the dollar yen moving much higher. It doesn't necessarily say anything about the yen pairs like euro yen, Swiss yen, CAD yen, pound yen, etc. We'll go over them soon, because at least for now, the yen pairs are showing more bearish sentiment than bullish, even though the dollar yen is moving higher, because the other currencies are losing strength against the dollar in a stronger, even more strongly. Okay, so that's dollar yen. As for, sorry, the lots of people here in the office today. As for dollar Swiss, as always, I don't have much to say about dollar Swiss. It's, there's no clear trend, not on the weekly, not on the monthly, um, not on the daily even. It's very noisy. As you know, specifically with the Swiss pairs, we're taking more margin now because of the risk with the Swiss pairs. As you'll see on Euro Swiss in a few minutes, the risk of intervention from from the Swiss National Bank is increasing. So I'll talk about it in a few more minutes. So Conrad is asking, with regard to breaking exponential moving averages, also this rule applies to that two candles should close above or below EMAs. Good question. Basically, as you know, when speaking about a breakout above or below a support level or a resistance level, I always say that we need to see at least two candles closing above or closing below. I think it's relevant also for moving averages, because one candle can be just noise, just like here. One candle closed below, and then actually here two candles closed below, but if we're waiting for a retest, the retest after these two candles didn't happen. Okay, it immediately crossed above and closed above, so it actually failed. So yeah, I always want to see a close of two candles above or below the resistance, whether it's a static like a trend line or a support or a resistance line, or the moving average. So and again, with dollar Swiss, it's irrelevant because there's no trend. But for dollar yen, where was it that we saw earlier? Yeah, I mean, was it here? I don't remember where we saw it, but in any case, yeah, maybe it was here on the monthly chart. Anyways, I want to see a few candles, or at least two candles closing, and then retesting. No, not here. I mean here. Sorry. Yeah. So close and closed above, and and then retesting, touching the moving averages, showing rejection, and starting to go up. I mean, this is a nice example of how the moving averages or the candle crosses above the moving averages, two candles, and retests and remains above the moving averages. There's a retest here, there's a retest here, even a one here. Again, it's on the monthly chart, but it gives you a nice direction. And I'll show you, well, on the Swiss yen, for example, I discussed it a few weeks ago, how the Swiss yen gave a beautiful signal on the monthly chart. Also, the moving averages are showing the bullish trend, and there's a move to the upside, a retracement, a pin bar, testing the moving average. And I said at the time that Swiss yen was a beautiful opportunity to go long after this pattern, and it gave really some, well, how much was it, like a few hundreds of pips? Yeah, like almost 500 pips. So that was a beautiful opportunity. Look at this beautiful trend. Look at how the moving average, the 9 EMA, is, how the moving averages are opening up. There's sort of a flag pattern, a retest, and you see on the weekly chart, it's a little bit more noisy. But on the monthly chart, it was very clear that the trend was to the upside, and that the price was going to push higher after this beautiful retest and rejection. The dollar CAD, well, we saw it in the last few months, how it came back from this demand zone around here, and formed now another demand zone from this candle here. After this engulfing bullish candle, it came back to the zone. Look how beautifully, after creating this zone here with this engulfing candle, it went up, came back, retested the zone, and started going up again. Really beautiful. And now the trend is not very clear. Will it continue moving up or down? I'm not sure. But if you are trading dollar CAD, what I would suggest is to pay attention to, again, the cross and the retest. And if the moving average, the short one, continues to the upside, crosses the long one, okay, and the price comes back and retests and maybe gives you some sort of a reversal candle, a hesitation candle, and you can always start, you can start looking for an entry point above the high of the retest candle, of the hesitation candle. So once the price starts moving higher, okay, let's say the candle starts forming and then crosses above previous high, the retest candle, you can enter long with a stop loss below the previous low, the low of the candle, and the moving averages, which are also serving as dynamic support. So this is the formation I like to watch. And on the weekly chart, it's in between the moving averages right now. So the daily, only if this pattern confirms or is confirmed, you can look for long. Otherwise, at the moment, for swing traders, there is no clear signal because it's kind of stuck in between the moving averages on the weekly chart. But it's coming back nicely, or coming up nicely from the demand zone. And I remind you, there's even a bigger demand zone on the monthly chart from which the pair is coming. And we'll have a look at the crude oil in before the end of the session. Crude oil definitely has an impact on dollar CAD, or the Canadian dollar versus all currencies. If crude oil continues moving lower, then we can expect dollar CAD to start moving higher, and vice versa. If crude oil returns to its uptrend, then Canadian dollar would probably continue gaining strength, and then US dollar against Canadian dollar will start moving lower, maybe eventually breaking below this support line. But then probably, I don't know, maybe by then crude oil will hit $100 a barrel. So Aussie dollar, the monthly trend is not very clear, but just like dollar CAD, it's sitting on top of this demand zone we had last month with an engulfing bullish candle. And as I showed you on the heat map, the Australian dollar and the Kiwi, the New Zealand dollar, are showing strength against other currencies. Let's see how it behaves below these moving averages, whether they serve as resistance or not. If it starts coming back down, look for support either around this trend line or around this demand zone. Not sure which one will be hit first, if it even comes back. Of course, if it crosses above, again, look for this pattern of crossing above, returning to the moving averages, as they cross each other, if they cross each other, and then once the price retests the moving averages and starts moving higher, look for long. If it even happens, because again, like I said, the trend at the moment is not clear. It's kind of, moving sideways. As for Fibonacci fan, actually, to be honest, I've never used the Fibonacci fan. I used the Fibonacci retracement tool, but the fan itself, I've never used it, and I haven't used Fibonacci tool, even the fan, the retracement tool, for years. I'm mostly trading, supply and demand. I use the moving averages as I'm showing you now, but that's it. Trend lines, support and resistance. I'm not using any other tools, but I'm sure there are lots of explanations on YouTube, on Google, that you can see people explaining on videos how to use the Fibonacci fan. So Kiwi dollar, again, is one of the strongest pairs, and the New Zealand dollar itself is one of the strongest currencies. Just like the Aussie, it did this engulfing bullish candle, and the trend is pretty strong, even stronger than the one on Aussie. As you can see, the Aussie is not super clear, but the Kiwi dollar looks like it's a little bit more bullish. And should it start moving higher, we'll see the moving averages start opening to the upside, forming a bullish trend. So maybe, as long as it's ranging or moving to the moving sideways, you should look for opportunities on intraday charts. But once it starts opening up, if it starts moving to the upside, then we can expect or start trading New Zealand pairs, going long on the New Zealand dollar. For now, like I said, the trend is not super clear. On the intraday chart, you see here how the trend reversed from the downside last week to the upside. Now the moving averages have crossed to the upside, and you can see here the retests around here. These candles. Okay, so the price kind of moves to the upside, crosses above the moving averages, and we have these retests and starting to move higher. And now, if you're looking for opportunities, good levels can be around here, or even around here. Confluence of previous resistance that may turn to support with moving averages. Okay, so these are the confluences I like to see, but wait for some confirmation. Wait for a full stop of the price, for example, forming some sort of a doji, a spinning top, a morning star, whatever. And if you want to enter with higher confirmation or higher confidence, don't just enter at the end of the candle, but wait for the price to start moving higher and crossing above the previous high, crossing above the high of the confirmation candle or the reversal candle. And once it crosses above, then you can go long. You can even set a pending order, like a buy stop above the confirmation candle or the reversal candle above the high, but wait first to see that the price is indeed stopping at this level. By the way, it can be a doji or a spinning top. It can be, for example, like a pin bar, even sitting on top of this level with a candle wick or something like this. So just wait for some signal. Don't just enter because it touched it. Okay, this gives you higher probability, higher confirmation. Okay, so that's pretty much about the majors, and I'll speak about a few crosses. Yeah, Raymond's, thank you for your question. We're actually aware of the fact that there have been a few technical problems in the last few hours. Accessing the website has been unstable in the last couple of days because we've moved, we've changed some servers, but we're working on it. And as for the trading account, I'm not sure why some users are reporting some problems, but we're in touch with MetaQuotes trying to figure out what the problem is. I really hope it will be resolved in the, within the short time, because or very shortly, because we're not sure why it's happening. It's obviously not all the traders, but some traders, especially in Europe, for some reason, are having problems connecting to their MetaTrader platform. And yeah, I'm not sure, CN, if you have like an expert advisor or some pending orders. Basically, if the platform is connected, then your traders are supposed to be executed. But if you're not connected, if the platform is showing that you're disconnected, then obviously your trades or positions or pending orders will not be executed. Yeah, so limit orders again if your platform was not connected while the price crossed these orders. If you were not connected, then these orders were obviously not executed because your account was not connected. And I apologize for the inconvenience. We're working on it. We're aware of it, and we're doing our best, everything we can, to resolve these problems as soon as possible. And Brian, I'm not sure to which you're referring to. I'm not sure to which pair you're referring, but that you say you have a buy limit, Aussie dollar. And again, I can't tell you if it's a good trade or not. Or 7343. You have a buy limit. Okay. Again, if I'm looking at the daily chart, if it retraces back, it could find some support or demand around here, right at the top of the demand zone, which is 7325 or so. But yeah, it could also, it could also find support around here or here, just like we saw on QE dollar. So good luck, Brian. Let's have a look. Well, euro pound, not much to say. Euro yen. Euro yen has been moving down from this supply zone, and the immediate demand zone is just below, like something like 60 something pips below. As you can see here, the trend at the moment on the daily chart is bearish. And yeah, but it looks like it's sort of consolidating. Maybe it's consolidating because of this previous. Well, it's not exactly. Well, it looks like it broke below the previous high here. Like it found some support last week and then broke below. The trend is still bearish for now. No clear signs of a reversal. Obviously, it can move a little bit high and then down back, but as long as it's as long as it's below these moving averages, as long as it's below this sort of resistance line, the trend is still very very bearish. And as I mentioned, a potential target is the base or the top of this demand zone, but it could take days, even longer than that. The same for Swiss yen. It started moving lower, but as I mentioned earlier, the trend is pretty bullish. And a potential setup. This is the weekly chart. Obviously, we'll have a look at the daily and other charts. But a nice setup could be if the price goes down to visit or revisit this previous resistance line, which now may turn to support, in confluence with this 9 EMA, which is also a potential dynamic support. So again, just pay attention to Swiss yen. If it goes below and finds maybe some support around here with on the daily chart, maybe also with the 50 EMA giving support as well, and the confluence of the resistance or support line with the EMA could push the price higher here. So that's for Swiss yen. The trend is the long-term trend is bullish, and on the monthly chart, it will be interesting to see if there is a retest of previous resistance as it was breached with a strong candle to the upside and then revisited. So we'll keep track and keep a close eye on this pair. Weekly chart, confluence of 9 EMA and resistance. Daily chart, potential confluence of this previous resistance and the 50 EMA. Pound yen gave some sort of a potential reversal candle on the 20 or the 21 EMA. And it was also, as you can see, some sort of a previous resistance area. Let's me here around this zone, more or less, there was resistance. Now potentially turning to support, only potentially. We'll have to see how it reacts to these moving averages and previous highs of these candles. It could definitely find resistance or demand here and turn back down. But the weekly chart with this candle is interesting, just this doji sitting on top of the 20 EMA and this zone. We could find some retracement or an up move. So let's see how it reacts to the 9 EMA and whether we see a push higher this week. Aussie yen and Kiwi yen. Kiwi yen is not open here. Yeah. So as you can see, Kiwi yen retested previous high very nicely. And on the weekly chart, we may also see some consolidation here before continuation to the upside, maybe after it broke above, just like Swiss yen, yeah, similar pattern, breaking above previous high and retesting. Swiss yen is even stronger, but CAD yen and Aussie yen are revisiting moving averages after retracing. CAD yen, Kiwi yen is even stronger here. So again, a potential retest and a move to the upside. Just pay attention that at the moment on the daily chart, again, it's stuck right below these moving averages, and it could find resistance around here. Just like on other pairs, the best setup would be for the for the price, let's say, to come back down here, go back up, retest. The moving averages will start crossing each other. The price will come back down, revisit these moving averages, give some, confirmation candles, and start moving higher from here. This will be a classic move to the upside. Should Kiwi yen indeed reverse in light of this retest of previous high and the overall bullish trend. So confluence of support and potential support from the 9 EMA. Remember that the moving averages are lagging indicators. So now it's not touching the EMA. If the price starts moving higher and the EMA follows, we'll eventually see the EMA very close to the price, but that's in hindsight. At the moment, it's not super close, but it's close enough. So that's sort of like a potential confluence of support. So yeah, as you can see, yen pairs are overall showing, at least some of them are showing bullish signs, especially the Aussie, the Kiwi, the CAD, the Swiss. As for euro yen, it still looks kind of weak, and pound yen, that's a good question, but it could be turning around here. We'll have to wait and see where which direction it picks in between these moving averages. Before I go back to TradingView and review the heat map and crude oil and some indices, I just want to discuss Euro Swiss quickly. Euro Swiss is, as you can see, it broke this trend line after retesting it a few months ago. It gave this very bearish candle below these moving averages, like a shooting star, and a strong push to the downside, breaking this trend line and almost consuming this demand zone. If this demand zone is consumed, the chances of intervention from the Swiss National Bank are increasing. Okay, it obviously can find more support or more demand from previous demand zones, but pay attention to this area, okay? This entire zone around here, here, all this area is a sort of a danger zone, okay, for traders, and maybe also for the Swiss National Bank. Okay, for the Swiss National Bank, this area where there was a strong push in 2011 and another strong push after the fiasco of the removed floor at the beginning of 2015. This area is a strong demand area with strong moves. So if the price continues moving lower, expect some high volatility in the Swiss pairs around here, with also a potential intervention from the Swiss National Bank. So pay close attention to Euro Swiss, because that's, for the Swiss bank, that's the test case. That's, if it goes too low, they will not hesitate to say something or intervene. And when the Swiss National Bank says something, it's major, okay? It's huge. All right, let's quickly go back to, yeah, and Mark, when you say marking out the supply zone, you mean marking the supply zone on Euro Swiss or where? Let me just go back to MetaTrader. Where do you want me to mark out the supply zone? Which currency pair and which time frame? The demand zone, you mean? Okay, so again, for Euro Swiss, this is the immediate demand zone. Let me show it to you here. Okay, it's the sort of the connecting point between these two candles. So this is the demand zone, the current one. There's also a demand zone around here. Again, the connecting point between these two candles where the trend started moving higher. And of course, well, yeah, these are the demand zones. Other than that, I also marked like a big, sort of a major demand zone where you see the rejection around here and around here. Let's have a look at the weekly chart. You see here, well, this is like a huge demand zone. Yeah, it's if I mark it, it's like 1,000 pips. But look what happened within a week. This pair moved 1,000 pips in 2011. So you see, I mean, it's crazy here as well. In 1 week, like 700 pips, and of course the drop here in 1 day was around 2,200 pips. So it's crazy, and that's why, yeah, tons of accounts had been blown. Brokers went bankrupt. So that's why we're extra cautious with Swiss pairs. Yeah, so 2011 and 2015, the end of 2014 or beginning of 2015. So let's quickly have a look at the at TradingView. So let me just make sure. Can you? Okay. Can you see TradingView? Can you see the dollar index, the 10-year yield that I'm sharing? Just want to make sure you can see it. Yeah. Okay. Thanks, Hannah. All right. So 10-year yield is also an important indicator for us traders. It moved down strongly last year or so, or at the beginning of in the mid, well, during the crisis. Now it's moving back up higher, and should it continue moving higher along with the dollar index, if both of them start moving higher strongly, 10-year yield means that the yield on the 10-year government bonds is rising, which means the price of the bonds is going down, which means traders or investors are selling the bonds, and therefore the yield is going higher. If the price of the bonds is going higher, then the yield is going lower. So that means investors are maybe selling the bonds and the dollar and going back to the dollar. If the dollar continues moving higher, it also gives us some indication of maybe potential weakness in the markets. You can also see it in the indices. All of them, all the major indices made like sort of a hesitation or reversal candle last week. This is the S&P, or the futures of the S&P, the E-mini. This is the NASDAQ, which has been moving very nicely inside this channel. This is the Russell 2000, which broke above this very long-term symmetrical triangle, but also made this spinning top and started moving lower. And the Dow Jones, the industrial average, also gave this candle. So last week, a lot of hesitation, not sure if it's suggesting something, but as the 10-year yield and the dollar index move higher in unison, it could indicate potential weakness or future weakness or upcoming weakness in the market. Crude oil, I mentioned it along with the dollar CAD or the Canadian dollar in general. So crude oil has really made a nice move to the upside in the last few months, but recently has been started to move lower. You can see this rejection candle also last week. Look at this monthly chart. It's absolutely amazing. Look at this trend line. From this point, let me just again make sure you can see the mouse. From this point around here all the way here and here, this is confirming the trend line, and then retesting again and coming down, retesting again and coming down very strongly to minus 30 something, almost minus $40 a barrel. But once it crossed above this trend line, it crossed above it, retested it along with the moving averages, this 9 EMA retest of the trend line, and then a nice move to the upside from all the way from 57 or 58 up to 77. That's like a $20 move in a few weeks. For those who are trading future contracts, for one mini contract, that's like $1,000 a dollar, or point, not a point, but $1,000 for each dollar. So a $20 move is like $20,000 for one contract. But now it's moving lower, and again, if it continues to the downside, we may expect an upward move in dollar against the Canadian dollar. The immediate support area is around 76.90 or 79, the previous high. Okay, potentially with a confluence of this 21 EMA. So that's it for now. Well, I won't discuss gold and silver at the moment. The trend is still not very clear, even though it seems like they're starting to break to the upside. And that's it. So this is for today. I hope you took some nice setups from it. The most important things, as always, is to manage your risk properly. Oh, by the way, just let's have a look at the yeah, well, again, Aussie and Kiwi are still pretty strong. Yen is kind of weak, and the euro is pretty weak as well. So that's it. Manage your risk properly. Be disciplined, be patient, wait for good setups, wait for good entry points. Don't jump the gun. Don't take any trade just because you're sitting in front of the chart and you feel like you have to trade. And that's it. Thank you for joining me today. Have a successful trading week. May the gods of pips be with you. Take care. Bye-bye.